Look, I think the market is underpricing the change in Washington. That's actually surprised me. I know that Bitcoin ripped from 70 to 100K, but I think the change is much greater than that. The reason for that is I think unless you worked in crypto over the last 4 years, you can't imagine how challenging it was. You sound crazy when you say that banks won't take your $10 million deposit. People are like, no way.
Did that happen to Bitwise?
It did happen to Bitwise.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Matt Hougan explains how Bitcoin keeps fiat currencies in check. In this video, we cover his insights on crypto versus traditional money. Let's watch to uncover these ideas.
Well, how do you value Bitcoin?
Well, I do. My favorite view of the value of Bitcoin on a long-term basis is to look at the size of the market it's going after. I think Bitcoin is well on its way to disrupting gold. That's a $20 trillion market. I think it's going to be used for international transaction and cross-border transactions. That's another many trillion-dollar market. And then you can divide that by the number of Bitcoin and you end up with a target amount. At Bitwise, we think it's going to cross $1 million by 2029. I think from a shorter-term perspective, you can just look at supply and demand in the market, right? The big criticism of Bitcoin is the price is set by supply and demand. But that's also a real benefit when you're in a market like today, where again, we're producing 160,000 Bitcoin a year and ETFs are buying 500,000. Right? Something has to give. And I think what gives is price resistance and ultimately it goes higher.
I think every pension fund should be allocated to Bitcoin. When I was a reporter, I covered just how so many of these pension funds are essentially underwater. It's so sad. But I heard actually, and I'm curious if you could tell me if this is true, that let's say there's a pension fund interested in allocating to Bitcoin. They actually have to go out and meet with a consultant for the consultant to do due diligence on Bitcoin. And that could take months and months. And if the consultant says, no, you shouldn't invest in it, then they just pass on it. Is that true? Are there gatekeepers?
It's mostly true. Yeah. So, I mean, the deep institutional investor market is a market with tier after tier after tier, because those people want their jobs. And if it goes wrong, they want someone to point at and say it was their fault. That said, we've been working with a number of consultants for a significant number of years, and many of them are already allocating. That's why you're starting to see this bubble up through the end. I'll add one more thought from an institutional perspective, because I think people overlook it. Crypto's a $3 trillion market right now. If you have a 0% allocation to crypto, you're effectively short.
Yeah.
Right. When we talk about people allocating 1 or 2% to Bitcoin, that's just to get to neutral. And I think institutions are starting to recognize that. Once you accept it as part of this pie, you need to have at least a little bit, or you're making an active bet against it. And they're not comfortable doing that either. So I think you're going to see this 1-2% thing really take off at the institutional level over the next few years.
So when the ETFs were approved, it was like all these horses coming out of the gate. And it was a big competition, which one was going to be crowned the king. And that's what all the, ETF analysts would talk about. Can you share a little bit more as now a year has gone by, where Bitwise is at? Is it difficult to compete with like the BlackRock ETF? Just talk to us about the competition within the ETFs.
Yeah, absolutely. We don't think of BlackRock as competition, actually. I'm very glad BlackRock is in the market. They've helped substantially grow the market. They've made the pie much bigger. They've certainly gathered a huge amount of assets. We're really happy having gathered, $4 billion into BITB. We're happy that we're 20% cheaper than BlackRock. We're really serving a different market. So they're serving mostly a traditional market that doesn't know that much about crypto. We're serving crypto specialists and people who want to work with a specialist manager. Some of the other smaller players I consider more direct competition, but I love that BlackRock is in the market.
Interesting.
All that said, it's hard, right? This is an extremely competitive market that's benefited people. These ETFs are extraordinarily cheap. Our ETF is 20 basis points, 0.2% per year. which is half the fee of the largest gold ETF. I mean, we've raced to a rock bottom, incredible deal for investors. So it's a little bit painful for me, but I think it's great for all the people who are buying.
Bitcoin reached two-week highs on March 20, climbing to around $85,427 amid swirling rumors of a major update to U.S. crypto policies. Markets are buzzing with excitement as whispers suggest that President Trump might be changing his strategy, which could impact the future of digital assets. This surge comes on the heels of a calm Federal Reserve meeting where officials chose to maintain current interest rates, easing concerns among traders. Fed Chair Jerome Powell noted that inflation has eased significantly and hinted at 2 potential rate cuts by the end of 2025, injecting much-needed relief into both stock and crypto markets. The rally in Bitcoin reflects growing optimism among investors who are eyeing the possibility of renewed crypto policy announcements soon. With the market consolidating near $86,000, traders believe that a strategic shift could further boost Bitcoin's momentum. Prominent voices in the crypto community are urging caution while remaining hopeful that these developments will open new doors for digital currencies and risk assets alike. As excitement builds, market watchers eagerly await clarity and fresh opportunities in the dynamic crypto landscape.
You need the ETF to be approved by the SEC, and then these big wealth management platforms also have to agree to let their advisors talk to their clients. I know it sounds crazy, but that's the way it works. And whether it's Morgan Stanley or Wells Fargo or Merrill Lynch or many of the largest firms haven't done it yet, even 13 months in. So we're in this very weird situation, and we do surveys on this at Bitwise. We ask how many financial advisors own Bitcoin in their own personal account, and the numbers are more than 50. And then how many are allocating to client accounts? It's like 15 to 20%. So there's this big gap where advisors are doing something with their own personal account that they can't talk to their clients about. Now that's going to change, and it's going to lead to, more flows into the ETFs and more uptick. But right now, I would say, fewer than half of all financial advisors in the U.S. can even have a proactive conversation. No matter how much they love Bitcoin, they can't bring it up with them. They have these 30-page documents that they have to fill out to figure out that there are no hidden risks in that market. But away from that, they want to know the same thing people know. They want to know, how do you value Bitcoin, right? Why is it worth more than zero? And then they want to debunk all the FUD that you've heard over the years, whether it's criminal use or governments banning it, etc. But the big one is, why does it have any value at all? And I think you can convince them of that, but it takes time and it's a process.
BlackRock's head of digital assets, Robbie Mitchnick, believes a U.S. recession could serve as a major catalyst for Bitcoin. As the economy slows, increased fiscal spending, growing deficits, and persistently low interest rates might create an environment in which Bitcoin thrives. Mitchnick explains that during recessions, monetary stimulus intensifies and traditional risk-on assets, like stocks and commodities, struggle, allowing digital assets to gain traction. He points out that fears of social disorder, often accompanying economic downturns, further drive interest toward Bitcoin as a hedge against uncertainty. Mitchnick also notes that the market is not accurately calibrated to Bitcoin's true potential, with many still mistakenly categorizing it as a high-risk asset. This misunderstanding, however, opens the door for long-term investors. At BlackRock, some sophisticated Bitcoin accumulators view market corrections as prime opportunities to increase their holdings, confident in the asset's long-term value despite prevailing economic headwinds. While some voices remain cautious, like researchers at Coinbase, who argue that recession fears and recent tariffs had dampened crypto optimism, BlackRock continues to lead in institutional adoption through its iShares Bitcoin Trust ETF, one of the largest Bitcoin investment products available. With Bitcoin currently trading at approximately $86,000, the prospect of a recession may not signal doom, but rather a transformational opportunity for digital assets. The evolving economic landscape may very well see Bitcoin emerging stronger, solidifying its role as a safe haven and alternative investment in turbulent times. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.